Hello, hello. Welcome to latest wealth, mind, money, and market. I am Kailash, financial advisor as well as a wealth coach. My dear friends, I have been interacting with a lot of people, and some people they purchase some stocks. Of course, some people already investors, some people are traders, some people they want to come into stock market, but they are hesitating to come into stock market. This is videos meant for the beginners, and you might have seen, or if you are already investing in stock market, you might be knowing, sometimes your friends may be saying, you purchase one particular stock, as soon as you purchase stock, thinking that a stock is going up, as soon as you purchase stock, within a 2 days or 3 days, stock price start falling down. Some people, they think the stock price is going down. That's why they'll wait. Okay, let me wait for some time. After some time, the stock price will come down more. But they expect something because they don't purchase some particular stock. After some time, they found that stock price is going up. Then they wonder, hurry, I should have purchased this stock. Yes, na? It might have happened for you also. And you might have heard about stories. Some people are minting millions of rupees and making billions of dollars in the stock market. Some people are losing a lot of money in stock market. Yes, my dear friends, that's why to help you, today's video we are going to produce this wonderful video is 5 major reasons which affects the stock price. 5 major reasons which affects the stock price, because as an investor you should know these reasons, and even though you are not an investor, if you are a youngster, you must watch this fully. Because once you know the reasons, then you can work out on how to invest in stock market. Let us start. My dear friends, either you may be investor, means if you are already investor, you may be knowing some of the things what I am saying. If you are new to this one, please watch fully. My dear friends, here all the 5 points are very, very important. Each point is interlinked with one point with another point, because when I am saying, it is not your textbook exactly you can give the 5 points and each point is separate. Here every point is interlinked. That's why don't skip any single moment also in this video, so that you can get wonderful benefit. See, most of the people they want to invest in stock market, but they have been told that it is very risky, it is very risky, it is very risky, and with that factor they are not coming into stock market. Some people, they are not in the stock market directly, but they are indirectly in the stock market. How? Every day they will be watching the newspaper, they will be watching the TV, and they will be finding out, oh, this stock has gone up, this stock has come down, and they may be feeling, array, I should have invested in the stock market. Correct, na? My dear friends, let me tell you, stock market is a wonderful place where you can mint millions of dollars and millions of rupees. Only thing is, the fear is stopping you. Yes, my friends, most of the people, fear is stopping. To remove that fear, this episode is very, very helpful. If you really want to come into stock market, please watch fully. Now, coming 2-3 episodes, we are going to work on only why the stock market prices comes down and why the stock market prices go up. My dear friends, please remember, as a psychologist, I am saying, dictionary meaning, fear is anticipation of pain. Means, people anticipate the pain in the mind. And some other is given a wonderful acronym for the fear, false exaggeration of assumed reality. False exaggeration of assumed reality. My friends, if you want to remove the fear, there are basically 3 steps I can give you. Whenever you are having a fear in any field, let it be any new city, new relationship, new studies, new education, the 3-step formula, it will remove the fear. First is knowledge remove the fear. When you are having a knowledge about any particular thing, the fear, almost 30% of the fear will go from your mind. Like for example, if you don't know one city, you are going to first time to that new city. Let us say Delhi. Till date you have never been to Delhi. So what happened first time when you are going, you will having a little bit fear. Suppose you gain the knowledge about the city. Where is the metro station? Where are the railway stations? How are the bus stops are arranged? What are the important locations in Delhi? Suppose some of your relatives is staying, if you ask them, they will guide you, or if you see the Google Maps or if you see in the YouTube videos, what will happen? When you gain more knowledge on Delhi, you will little bit, almost 30-40% of fear will go. Second step is action. Take the action. When you go into city like a Delhi, Mumbai, Kolkata, or let it be New York or Tokyo, when you go and enter and start living in that city, initially for some time you will be having a fear. But after 2 days, 1 week, 10 days, 1 month, 3 months, or 3 years, after 3 years, tell me, will you have any fear in that city? No. That means second step is taking action. The third step is the results. When you start getting results as per your expectation, then what happens? When you start getting positive results, the fear will start melting down. And after getting the results, once again, if you start improve more knowledge, take more actions, get more positive results, like the cycle will start going. First is the knowledge, second is the action, third is the results. The results, positive results, will improve your confidence. With the confidence, gain some more knowledge, take some more action, get more results, gain some more knowledge, take action, get positive results. Like this, if you keep on doing, one fine day, you will have more comfort in any field, let it be college or marriage. You will have more comfortable and you start taking more steps. So to remove the fear, this episode, 5 major reasons which affects the stock market, price ups and down. My dear friends, here is the 5th point, is very, very important. And why very important is, this is interlinked with all the 4 points. By saying that, don't go directly to the 5th point. If without watching all these 4 points, if you watch 5th point also, no use. So start watching entire episode. Yes. First point, the first reason why the stock market prices go up or down. The first is internal factors. What are the internal factors? Let's see. My dear friends, imagine here, don't think like you are investing in stock market. Don't think already you are an investor. Imagine you are having some huge amount with you. Say, huge amount, there is no definition actually. Let us say you are having 10 lakh rupees or you are having 1 crore rupees. Now you want to start a business or you want to purchase ready-made business in your city. Let it be whatever the business you like. It can be a textile shop, it can be a restaurant, or it can be a computer peripheral shop, or any cloth store, whatever may be business, whatever you like, or stationery shop, or medical shop. Now first what you do, now somebody asks you to become a partner, or some of your relatives. Now tell me, if your relative is a good person, will you invest? Or if your relative is a bad, will you invest? Obviously you say, yes sir, I will see if the person is very trustworthy or not. Yes? Same the way, my friends, the internal factors affects the major role in the stock prices. Is whenever the internal factors changes, it will affect the stock price. For example, suppose in one particular company change of management is happening. Imagine earlier management was very, very good, superb, and they are giving extraordinary results. Due to some family disputes, the management has been changed. So what will happen? The market catches that one because the management is going to change. They don't know about new management. If the new management, they already heard the news that new management is not good, then the stock prices may come down. Suppose the new management is very, very efficient, then the stock prices will start moving up. For example, you might have seen in when the Satyam has collapsed, when the Tech Mahindra has acquired the Satyam, initially the market was stable. When they know about Tech Mahindra, because it was supported by some efficient management, Tech Mahindra, then the stock prices of the Satyam Mahindra, now it is called Tech Mahindra, started rising. Have you seen? When somebody management changes, these are called internal factors. Sometimes what will happen, suppose some companies quarterly returns, they are submitting the quarterly returns they are giving. they are declaring quarterly results. So what happens if results are positive? Then the stock market price will go up. If results are negative, the stock market prices may come down. And sometimes even though profits are there, if the results are not meeting to the expectation of the investors, expectation of the industry, expectation of the media, then what happens? It will affect the stock price. Stock price will start fluctuating. These are called, all comes under internal matters. Like internal matters, a lot of things are there. Like suppose companies producing invented some new product which feel market is very, very useful, or some products, this give positive returns. Suppose some of the products what company has manufactured, they came to know by the observation of some security agencies or scrutiny agencies or scientists, they said the product is not up to the mark, then there are chances that stock market price will come down. Yes. Next, in the internal factors only, some other factors are there. The company has got some new order, very, very big order. What will happen? Stock market price will start increasing. Suppose some company, major client, they withdrawn from the company. So what happened? It will affect stock price. There are chances that stock price may come down. Suppose the management from the company, it has come in the rumor in the media that they are involved in some scams. It also affects the market because it is internal matters. If really he involves in the scams, the stock market price will start coming down. And suppose the product of that particular company, they got international recognition saying that it is the best product in environment protection, or suppose it is a drug, they say that it is this drug is very, very useful for the lot of people, and suppose one Nobel laureate in medicine field recommend so particular medicine is very, very useful, it is going to create wonders in the life, then the stock market price will start coming up because they all are internal factors. Now let us go to second is external factors. Before going to external factors, I want to give some more internal factors. My friends, suppose some particular stock, the company is producing high results. Suppose the company has burned due to some fire accident. What will happen? Naturally, some production will start coming down. Yes. And suppose labor in some particular factory, they are going on strike. Lockout of the company will results in the coming down of the stock prices, right? Suppose they are acquiring some new company, then what will happen? It will help you to increase the stock price. These are called internal factors. Now let us go into next factor is external factors. My dear friends, external factors, lot of external factors are there. We cannot make into 1, 2, 3, 4, 5 like this. N number of factors, and it will be keep on changing according to the time. It depends which industry. It depends on the which sector. It depends on the which country the industry is located. It depends on the expansion of business in other countries. How much presence this particular stock company is having presence in other countries. Because external factors, n number of external factors, not 1 or 2. But to simplify that, I want to give you some of the external factors which change. One is the political. Next is social. Another is economical. Generally, majorly, these 3 external factors which will affect the stock price to go up or go down. Let us go into some of the political issues. Suppose in one particular country, elections are approaching. So what will happen? Industry will have some expectations on the politics. Suppose some stable government is coming, then there will be chances the stock market may be stable. Suppose the elections survey says that hung parliament is going to come, or after the results of the hung parliament has come, no political party has got full support, then there is some political instability is there in the country, it will affect the stock prices. Suppose there is a fight between 2 countries, there is a war between 2 countries, it also affects the stock prices, because what happens, some particular country producing some particular product which is going to maximum market is outside of that country. Suppose this native country is having some fight with other country, naturally it will start affecting on this one. Next is sometimes a trade war between 2 countries. What will happen? They take into personally the politically motivated trade wars, and they started imposing some taxes on the products. They started imposing some instructions. They started imposing some strict guidelines. They have some restrictions on import and export. In that case also what will happen? It will affect the stock prices. Especially in IT sector, most of Indian products, they are exported to other countries. Whenever the politics in other countries changes, it affects here. And as well as dollar price versus rupee price, that also affects the stock prices, right? Next, when it comes to political, for example, whenever the change of taxation system, it will affect some sectors, not all the sectors. Like for example, if government introduces new tax on cigarettes, so what happen? Whatever the companies which are producing cigarettes, that company will start affecting. Suppose government says that in the GST, some of the products comes under zero GST, no tax on some products. So some particular company producing so particular products, what will happen? That particular products will not have any tax burden. In that case, what happens? Their profitability increases. It will also affect the stock prices, right? So, and sometimes what will happen? Due to some particular communities, some agitations will start coming up. At the time also stock prices affects. Like for example, during the festivals, during the New Year time, some stock prices will keep on going. And during the monsoon time, some stock prices will start affect. And the same the way like agriculture. Suppose this time they have predicted that wonderful monsoon is there. So what happened? Agro-based products, they'll have a more agro production. So the basic product, the companies will get with a cheaper price. That's why agro-based industries, there are chances that the stock price may go up because they are going to make more profits. Whereas if monsoon is very, very bad, then what happens? Agriculture products cost will raise up. That hits the production cost of one particular company. So what will happen? At the time, it may affect the stock market. These are like external factors. Let us go into some more external factors. For example, in US, Federal Reserve is going to change some prices, or in India, Reserve Bank of India, they are going to change the interest rates. It also affects some sectors. Suppose interest rates are increased, some sectors will be benefited. When interest rates are coming down, some sectors will be get benefited. That it is a big topic. We are going to create one more video, how the interest rate affect the stock market. Please watch that video also. We are going to create in future. Next, cyclone, some tsunami, or some particular area terrorist attacks, Naxal attacks, or some communal riots affects. These are all which are not in the control of the internal, even though they are not going to change any fundamentals of the company. It is not going to change any fundamentals, like it's not going to change management, but still they affect. For example, let me tell you, during the 9/11 attack on US, it was actually main physical attack, but that attack has caused a panic among the people. Almost for 2 to 3 years, people are getting scared to enter in the stock market. That is a pure external factor, right? Of course, some internal is also there. That's what I was saying. All factors are interlinked. Now let's go to third point. The third is the market pressure. Yes, my friends, actually, if you go and study deep into business sectors, and if you are a marketing guy, if you are an entrepreneur, you will come to know, you can understand very well, or you are a technical analyst or fundamental analyst, you will come to know. And market goes by some trends. There are called major trends, minor trends, and intermediate trends. The major trend, for example, major trend is a bullish, means bull market means everybody will be in highly positive mood. Entire crowd will be thinking market is going up, market is going up, market is going up. At the time, what will happen? There is a pressure from the market to buy more stocks. Whereas when the sentiment changes into bearish, bearish means when the stock market is coming down and market pressurized to sell more thing, and what will happen? That is the buyer's market. So based on the demand and supply, the stock market prices will up and down. Some people want to sell more stocks. Some of the sectors, some people, they don't want to sell the stocks. It will also affect your stock price. My dear friends, not only one thing, especially market means some of the indices are there. That's why not only following fundamental or only by following technical analysis it will not work. You have to follow some of the indices also. Like index, when some particular index, recently I have observed, the Nifty 50 of banks start giving some raise, it affects some other sectors also. Same the way, just not only following fundamental and technical analysis, you have to follow some of the indices also in stock market. That will help you to remove fear in your mind. My dear friends, all looks like a Greek and Latin. My dear friends, once you enter, start learning and you can create wonders. And it will create more interest in your stock market. Now let us go to next point. Next point is hype. You might be knowing the meaning of the hype. Hype means everything seeing in a magnifying glass. Of course, the physical things when you see in the magnifying glass, it looks like a bigger. Whereas when the people start seeing in their mind, that's called hype. To create a hype, some particular forces will be working in the stock market. Actually, that itself is one big business. As an investor, when you are investing in stock market, you should know about these factors also. Of course, sometimes it is positive, sometimes it is negative. The real investors make money in both. For example, how the hype will be created, let me explain you. My dear friends, already we have created one video about that stock market tips and fraud SMS. Please watch that videos also so that you will come to know how the hype is being created, right? Let us go into hype. One hype is being created by the promoters of the company itself. What will happen? The promoters will start saying great about their product, great about their company by seeing that some of the people think, oh, it's going to create wonders, and the hype started giving vibrations in the market. For example, if you see, before releasing the movie, what a producer, movie director, music director, hero, heroine, they will come to the media and start saying, oh, wonderful movie, excellent movie, it's going to create wonders, right? It is going to break all the records, it's an entirely different story. Like this, they start saying. By seeing that audience, they think, oh, it's a wonderful movie. But when you start watching the movie might have utter flap. At the same time, some of the movies might have become super hits because based on their words. So promoters also create hype sometimes. Sometimes what will happen is, suppose some stock is not doing good. Some promoters hire some people they call operators. Operators means they'll make 4 or 5 people together. They start buying some stocks. In between, some people will purchase, some people will buy, some people will buy, some people will sell, some people will buy, some people will sell. Like this, the circle will keep on going. It will cause us to either increase of the price or decrease of the price. Next, sometimes what will happen? The hype will be created, negative hype also created by some competitors in the business industry. So what will happen? Some of the competitors, like if you see in the movie, before the movie releases, some people take the piracy and started giving the comments in social media that that scene is not good, that scene is not good, the editing has come down. Like this, there's a conflict between hero and heroine. What will happen? It will affect the movie collections. Same the way some people, they do conspiracy in the market and they start creating. Nowadays social media is there. They started publicizing in social media about negativity about some particular company. So what happens? Stock prices will start coming down. When the stock market prices come down, they will go and grab that particular stocks. This also affects. One more reason in the hype may be like this: publicity. Because nowadays a lot of marketing avenues are there. Long time back, what happened around 50-60 years back, only 2 things were there for publicity. One is about newspaper and magazine. Nowadays, I need not say about social media, so many places are there. So what happened? More they are creating the publicity, people start imagining the company is more valuable. Some of the companies, they spend a lot of money in publicity only, maximum money in publicity. So they create a positive image in the company. I'm not saying it is wrong. Sometimes it is also good, because when the high publicity comes, more people will start investing in that particular stock. When more people are investing in stock, naturally stock price will start coming. Suppose you are already invested in that particular stock before the publicity, then you are the winner. You are going to make wonderful money, from that particular stock. Next is about the founders. Suppose the founders are very much energetic and enthusiastic and they keep on coming in the media regularly. So what will happen? They will become very, very popular. For example, if you see in India, Reliance, they will keep on coming into media and they will keep on giving some press releases every 2-3 months. They will keep on appearing in the media. They will keep on appearing in the news. So that what will happen? The company value keep on increasing. Reliance is the best example. Some of the companies, they are making wonderful profits. Of course, they are not as big as Reliance. They are making good profits and they are giving good returns to the investors. Some of the stocks I have observed, even they have gone 100 times. Some stocks they have gone within a 1 year, they are given 50, 60, 100% returns. But their promoters, their company founders, they are not interested to come into media. In that case, I am not saying value will come down, but the hype may not be created in the market. So that is one reason. Hype also makes the stock price to go up and down. Sometimes negative hype also creates. Negative hype, what happens? It will make your stock price to come down. Now let us go into next point. Actually, this I cannot say fifth point. This is the underlying factor for all this one. Actually, entire world, entire life is dependent on this factor. So I cannot say fifth factor. It applies in every factor. Already we have discussed. Let us revise the reasons. One is internal, second is external, third is market pressure, fourth is hype. All these are being controlled by one single thing, which is lies here. That is emotions. Yes, my friends, the most important factor in the stock market which creates the is emotions, may be positive emotions or negative emotions, because emotions will not have any logic. That's what somebody said. Always emotions, and when the fight between emotion and logic, emotion always wins. If you want to win emotion, you have to apply some more emotion only. Always emotions listen. And that's what the wonderful thing what politicians use is, they flare up the emotions in the people. Then whoever able to flare up the wonderful emotions in the people, the party wins in the elections. Same thing in the marketing people also they do. They flare up the emotions. My friends, entire market is being operated by the emotions. Suppose the euphoria is about positive emotions. Market is going up, market is going up. Suppose, let us take one ABC company. One news has come that the management is changing. Suppose all the people saying, hey, management is very good, management is very good. At the same time, external factors start saying the government, some particular minister is very, very favorable for that particular company. One more emotion start. Then the media will start supporting. Analysts will start recommending the stocks. And at the same time, outside people also start buying so many products. All the things will start making up a spiral. The company will start growing very nicely. Because the emotions. When mass is going, all the people want to purchase that stock only. When same thing happens in negative side, when the things are going down, everything will start coming down. That's why I have observed during the elections, some of the particular parties, they will go very, very high emotions, they flare up and they'll come into top and they'll become leaders. And emotions are the highest factor which influence the people. Let me give one example. Like during the freedom fight, when Mahatma Gandhi was fighting for the freedom, at the time there was no social media, no Facebook, no Twitter, no YouTube, no Google, no television. But how the message has gone to one person to one person to another person is the emotion, emotional attachment. Then entire country has become united, the emotions. Same the way, let me give one more example about US and Vietnam war. Actually, logically speaking, USA was having a big army, wonderful defense equipment. They are having highly technically, they are highly sound. But why they could not defeat Vietnam is, Vietnam people were emotionally attached with each another person. That's why you might be heard. So emotions, that's what in earlier videos I was saying, especially when you are investing in stock market, have emotional balance. My dear friends, let me tell you simple thing. Stock market, making profits in stock market is simple mathematics plus logic minus emotions will give you profits in stock market. Of course, it's not that much easy to manage the emotions. Emotions in the family are different. Emotions stock market are entirely different. The emotions factor is you should be able to observe what is the emotions of the stock market. If you come to that level, easily you can make the profits. My friends, as I was saying initially during this video, why most of the people they are not entering in the stock market is emotion is stopping. The fear, have you understand? Fear is also one emotion. Greed is also emotion. Hope. So if your fear is stopping, as I was saying initially, knowledge removes the fear. Let me revise once again. First, if you are having any fear in the field, knowledge removes 30% of the fear. Then when you take action, remaining 30% of the fear will go. When you get positive results according to you, remaining fear also will go. Same thing, have a knowledge, take the action and get positive results. Hope this episode was very, very useful for you. We are going to create some more excellent and very informative videos which are very, very useful for your financial life and family life. And thank you. Till we meet again. Enjoy every bit of life. Have a nice day and bye-bye.